This is going to be a quick video on rates and the movements and things that have caused it in the last few months and maybe some thoughts about the future. All right, my name is Mike Florin. This is June 25th, 2025. I moved over because there's going to be a lot of charts over my left-hand side. All right, now let's start it off. We're going to go to a 1-year, 10-year treasury. And I'm showing you this to show you historical, just kind of recent historical effects of decisions. So, first circle here is going to be the first rate cut the Fed did. Now, the Fed has not cut the rate in a while, quite a few years. And rates were coming down. Then they cut the rate in September of 24 and rates shot up. They stabilized, came down. The Fed cut the rate again. What happened? Rates shot up through January, which was the second highest rates have been in 25, 30 years or so. Now, why did the rates go up after the Fed cut the rate in these two situations? Well, simple. There's a more demand on cash. If cash can be had for cheaper, there's more of a demand. Now, does the 10-year or does the Fed rate decision actually affect mortgages directly? No, not at all. But in the short term, the trickle-down effects or the movement of cash does. And I don't want to say trickle-down of effects. That's kind of a bad statement. But there's kind of an effect there. Okay? So if the Fed cuts their rate, we expect short-term rates to go up. And then long-term, it stabilizes and starts to come back down again. Well, let's look at this next bit of chaos here. This is the tariff chaos. And if you notice, the rates, they come down and then they go back up again. And then they come down again and then they kind of stabilize. Why? Because the information that's new that creates instability in the markets will make money people anxious. And when those people are anxious, they start to make decisions with their money. And the decisions with their money usually result in higher interest rates. Now, for all of us here on the consumer level, we know that, well, the Fed did not decrease their rate, but in the last several weeks, rates have been coming down. So I'm gonna draw, let's see, let's pull up like a 6-month or something. I'll figure it out later. And I'm going to show you the range. So here's the range that we were at before the tariff decisions were put into effect. And you can see this is kind of that average line. I'll draw one line on there. Okay. Now, what's happened in the last 6 weeks or so? You're seeing that this slow downward trend is going right back down to that where it was before, that average trading area. You want to call it that balance area or the mean, right? So if trading in that range was kind of hovering around a certain spot, it would go down and then back up to that spot, up and then back down to that spot. And then it came up and over, again, because of chaos or bad information or not good information. Then you would see the rate movements. Now, rates have stabilized because there's not much bad information and they start to come down and trickle down. The other week, the Fed did not decrease their rate. More stabilization, so the rates keep coming down slowly. Now, without any Fed rate cuts last year, with rates being the highest they've ever been, the market naturally corrected a few times. And I'm going to create a circle on a few items. Now, look at this chart, look at these circles. These are the periods of time where we were back into really low rates, very similar to where they were before the pandemic. And yet the Fed did not decrease the rates at all. I just thought this was interesting to see. I mean, at this point in time, if you look here, our government rates were back down into the high 4s with no discount points. That's just where they were. Why? Because the market will always correct itself. Supply and demand of cash will correct itself unless there's chaos in the government. Now, with that being said, the perception of rates. If perception of rates for buyers keeps coming down, there's more and more buyers to the market. Guess what we've seen in the last 2 weeks? A big run on buyers, a big push on buyers. Buyers calling the phone more than I've seen in a while. We've got realtors, they're saying, I've got more buyers, I've got more buyers. So for you realtors out there, that you have a network of buyers that you've talked to over the last several months, maybe a year or so, rates are slowly downward trending. This might be a good time for them to get off the fence. We all know if they wait until rates go down, it turns into a seller's market again. The house that they might be looking at 5 might now be 6. It gets a little crazy sometimes. So anyways, Mike Florin, low cost mortgage. Rates are going down. and that's a really good thing. It's several different weeks of it. And yeah, I'll talk to you later. Bye.